Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Monday, December 3rd. Hey, wow, last month of the year. Got a couple of economic news releases scheduled for today. We'll start off with the PMI report for the month of November. We had a 52.4 rating, so it showed a little expansion, and we figured it still could expand a little bit in 52.4, and we did. We got a little bit higher at 52.8. So a slight improvement for the month of November for the PMI. And then we got the ISM and for the month of November, and we had 51.7. We figured it also kind of going a sideways pattern and actually dropped. So we showed some on the manufacturing side. This is manufacturing here, showing a contraction for first time in a while here, 49.5. So that's not obviously good news. And on the last but not least, we got construction spending. This is for the month of October. We had a 0.5% growth or 0.5% increase of spending, and we figured that will continue. And it kind of jumped, so it's about almost triple of the spending. So good news right there. So only bad news we had today was the ISM. Obviously, the PMI and the construction spending were decent numbers right there. So we'll jump over to the headline news and see what we got over here. Right now, the stock market's kind of a little mixed on that, but what we said of our technicals. But we also got talk more about the fiscal cliff. There's been some optimistic, feeling a little bit of optimism, but with also some skepticism. But now it looks like Sunday, the both sides are kind of digging in their heels, and it seems like right now the big headline for that is of course, could be more than that, is the 2%, the tax increase for the top 2% income earners. So, so that could be something that could drag it out a little bit longer. Now we also have China's PMI showed some expansion there, so that kind of helped things out, especially on the European markets and probably over here in the U.S. Kind of helped us out a little bit. But also the Euro's PMI showed some contraction for the 16th consecutive month, so that's obviously not good news over there. Let's go ahead and see how this is all playing out in the bond market. So as you can see, we're kind of see a sideways pattern. We did start off much lower today. We went up, so we're about 15, and since we've created this, it's actually up 18, so it's at the same as where we left off on Friday. So we're actually right up about here right now. But if you can kind of see, if we kind of gauge this in here, we've been kind of going in this sideways pattern here for almost a month right now, as you can kind of make it out. So we haven't like had too much fluctuations quite a bit, but if you kind of expand it, it's kind of more of a sideways pattern. All right, so right now interest rates are about the same as where we left off on Friday. So as you saw, we did have some improvement there. We did close above the 105.20-ish, as we said, which was a good thing, and that could lead to some more improvement. We could see this go in a sideways pattern until later in the week with the job numbers coming out. That could obviously set, kind of play off what things are at. Sorry, folks, it's Monday. So, anyways, I hope you guys have a great day. Thanks for stopping by, and I will see you guys tomorrow.